Hey everyone, it's Daniel here from Infovest. Hope you're all doing well. Let's talk about Canadian inflation. So the numbers came in lower than expected, way lower, the lowest since 2 years, basically at 3.4%. And that had to do with the lower gasoline prices. We're seeing gasoline, we're seeing crude oil, we're seeing the energy commodities out there drop lower and lower in terms of its prices, which is feeding into these lower CPI reports, these lower inflation reports that you're hearing about. And that's why you see the headline CPI number at 3.4% for Canada. Now, this is the headline number. This is the number that the politicians are interested in, that they will throw out there in the news media and say, hey, look, inflation's coming down. We're very close to our 2% target. Fantastic. We're winning, we're winning, we're winning. Well, actually, when you look at the report and you look at the core component, it's telling a very different story there. The core component, don't get me wrong, did come down slightly, but not as much as the headline. And the reason the headline number came down is, like I said, the gasoline prices have been dropping and dropping and dropping, really weighing on that headline figure, and which makes it looks like, things are getting better. But when you look at the core component, when you look at other areas of the inflation report, what do you see? You see that shelter's still up. You see food prices still up. For example, groceries that are up still 9%, 3 times the inflation number. That is still putting a lot of pinch and stress on consumers out there. The fact that you go in groceries or food away from home, the fact that those are higher, it makes you think, how can anyone continue to handle these higher pressures, higher prices? And the shelter component too, especially in Canada, especially in certain areas like Toronto and Vancouver, which continue to see rent and housing prices still elevated. And here's the thing, guys. Real estate is a lagging indicator. It's not going to react like the stock market. You're not going to see, like, for example, the REITs out there that have been heavily hit 20, 30%. You're not going to see that in housing because it's a very different market. It's a private market. It's not like the stock exchange where things get priced in very quickly and you see that in the price. But in terms of the housing out there, that continues to be elevated and sticky and also putting a lot of strain for consumers. So what does this mean? Are we going to get a rate hike in July, in next month, or are we not? Because look, the inflation numbers are lower, the CPI headline number is lower. But when you look at the other components, they're still up there. So is this enough for the Bank of Canada to basically slow down or stop, or is the Bank of Canada completely done? Well, my take is that I see that Bank of Canada still doing another rate hike. Still going ahead, probably most likely in July, we might see Canada do another rate hike. And you're going to scratch your heads, you're going to bang your heads, you're going to be like, why? What's going on? Because the 3% is not enough. The Bank of Canada's target, yes, they have a range of 2 to 3%, but they're not going to get to 3% and say, okay, we're done here, let's start cutting, which some people are expecting, that rate cuts are going to come soon. In fact, rate cuts are going to come once something really, really deteriorates in the economy, once you have that event. Right? Could be credit contraction, credit crunch, etc., commercial real estate. We don't know. But the thing is that we can see another rate hike come in because you still see certain areas of, when it comes to the inflation, inflation report, you're seeing certain areas still high up there for the prices. And the Bank of Canada, we're looking at the housing market, and they did mention it a couple of times subtly, saying that, hey, the housing prices, the rent, the shelter component is sticky and we're going to see it elevated for some time, and there needs to be something done about this. Now, it's like a chicken and egg scenario, right? What came first, the chicken or the egg? Same thing with raising rates and the shelter component, right? Because, hey, you raise rates, what do you do as a landlord? you raise your rents, right? And the tenant ends up paying more. Again, Bank of Canada raises rates again, then you get the rents going up again. And to what point does this end, right? Do we keep raising rates, raising rent? That's going to keep the shelter components still sticky until there is true pain to be felt. And a lot of central banks around the world are expecting this and are trying to hike and raising rates, even though you're thinking that this is all crazy and everything. They're doing this because, yes, they're trying to engineer a recession. And if you look back in the past, in history, it's always been that when a recession hits, you finally get the 2% target. You finally get inflation to come down, which would basically mean that job losses would need to happen. The unemployment rate would need to skyrocket. All of these things that you see during a recession, which would then cause people to sell their houses, sell their assets, etc., etc., and that would bring in that deflation, those deflationary forces that would bring housing and all these other components in the inflation report to come down. And then yes, you could say that the rate cuts are coming. Now, if they pause, right? Rumors about Bank of Canada doing one more rate hike and then pausing. Well, if nothing is breaking, the economy is doing fine, then they will pause for a long time. Don't expect rate cuts to happen right after the pause. There's no pause and then, okay, 1 month we're going to, 1 or 2 months later we're going to start cutting rates. There would have to be a reason to do so if there is some sort of stress in the economy that is causing more pain, or some sort of event that happens that causes them to start to cut rates. But don't think they're going to do that very quickly, especially if the economy continues to be resilient, the job market is still strong. They will continue to impose tightening and continue to keep things very tight and difficult until those prices come down. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, the bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.